there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Friday. In today's program, I want to discuss the latest data coming out of the UK and what that could potentially mean to the Bank of England's warnings of last week, plus another warning from another bank, which was announced late last night. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, today at 6 a.m. UTC, we had certain information come out from the United Kingdom, and it is indicating or underlining the warnings we had from the Bank of England last week. And it's really illustrating how the cost of living crisis is really hitting UK households. Now, it was UK GDP which came out, and it did prove that the UK economy contracted in the second quarter. The actual announcement itself, it actually came in at negative 0.1% versus negative 0.2%. So not quite as bad as the market anticipated, but still pretty negative. And bear in mind, if we look at the last couple of GDP announcements, in end of 2021 for the UK, it came in at 1.1%. In March, it came in at 1.3%. And then in June, it was announced 0.8%. So negative 0.1% is not a good sign. Now, don't forget, last week when the Bank of England raised interest rates by 50 basis points, which is the largest increase they've done since 1995, they followed that up with several dire warnings. One was they predicted the UK will fall into a recession in quarter four. And what's scarier than that, they say, or they believe, the recession will last 5 quarters. 5 quarters. That means it's a long recession, almost as long as the recession of the credit crisis of 2008. So pretty scary on that. And then they moved on to inflation. And don't forget, the whole world at the moment is gripped in a battle with inflation. And don't forget, UK inflation at the moment is 9.4%. 9.4%. And worse than that, the Bank of England predicts that inflation in the UK will hit 13.3% in October. I say that number again because that is frightening. 13.3% in October. And as well as that, they went on to say their inflation target of 2%, don't forget, their target is 2%, and they're thinking it'll go to 13.3%. Their inflation target is 2%, and they believe they won't hit that target until 2025. 2025. So yeah, very dire warnings, certainly backed up today by the UK GDP announcement. Yes, it wasn't as bad as people anticipated, but it still was a negative reading. But anyway, let's have a quick look at the sterling and see how it's reacted to this data. So let's bring it up. Okay, so this is the cable, obviously, the British pound versus the US dollar. Currently trading at 121.78, below the 122 level, but it managed to breach slightly on the back of that better than expected US CPI 2 days ago. Under that level of 121.97, at the moment finding a bit of a support around the 121.73 level. But okay, yes, it is below the 50 and the 100-day moving average. It's still way above the 200-day moving average. So yeah, it's like I say, still struggling against the dollar on that. If we have a look, this is the pair I was looking at yesterday, the euro sterling, because the euro sterling did hit a 2-week high. It's still trading around a 2-week high level at the moment. This is on the 30-minute chart, don't forget. Because that data came in slightly better than expected, negative 0.1, Okay, not as negative 0.2. The euro did have a little bit of pressure, but as you can see, it's now rising again. It's currently trading at 0.8538. There is a little bit buying or potential support around 0.804495, which is the 100-day moving average. The key level for this pair, though, is 0.84700. If you look at the daily, okay, look at bigger picture on the daily, like I say, we can see it's still just about around the 2-week high, but it is trading between 0.84700, which is a key level on the daily, and a potential area of interest is 0.8424. If we have a look at the guppy, which is the British pound Japanese yen as well, like I say, again, a bit of pressure from this result. Okay, it was, again, it's negative, not as bad as it was as anticipated, but currently trading at 162.28. Okie dokie. Right, another bank and another warning, just to shake it up a little. Why not? Bank of America last night announced to its investors that do not trust this stock market rally at the moment. Do not trust this rally. Now, the S&P is indeed, okay, up 15% from the lows it hit in June. And obviously, we've seen a bit of a rally over the last couple of days because of that slower inflation reading of the US of 8.5% versus 8.7% expected. And again, I've gone over this lots of times. The market, because of this, is thinking that the Fed's going to be gentle. And you know my opinion on that already. I don't think they will. I think they will continue to be aggressive. But anyway, this is what the market's thinking at the moment. But the Bank of America is thinking pretty much this, similar to what I'm thinking. And they say they are not confident that the bear market is over. So they are saying, be cautious, be prepared for a further downside. Don't get overconfident in the market or in this rally at the moment. So they are saying, like myself, I think the market is kidding itself that the Fed's going to be gentle. But anyway, let's have a quick look at how the market is currently trading in S&P, etc., and how this rally, if this rally is continuing or actually running out of steam. Okay, at the moment, this is on a daily, okay, which can see that the S&P is trading at 4,228 points, above that key support area of 23.6 on the Fibonacci, which is 4,190 points. If you look at a 30-minute, okay, again, like I say, this is where the rally started from the inflation reading, and it is slightly continuing at the moment. It is above, this is on a 30-minute chart, above the 150 and 200-day moving average. So saying in the short term, it is potentially in a, still in a bullish mood. So that rally is continuing. If we have a look at the euro, this is interesting pair, actually. I was looking at this morning. Again, it's running out of steam slightly now against the US dollar. This is where obviously the rally started with the GDP number. And as you can see, it's continued for a bit, but now we can see a little bit of dollar strength against the single currency. And it's currently testing this key area, which we put in 1.0292. So it's bouncing off that at the moment. So that's the key area. If we look on a daily, a bigger picture, you can see it's pretty tight at the moment. It is testing that 10292. So it is running out of steam against the greenback. In fact, not this, I necessarily agree with them, but ING today, they in their opinion, they believe the euro will fall around about the 1.0275 level at some point today. So they, like me, are seeing that the single currency is running out of steam against the greenback. Should we have a look at gold? Why not? We always look at gold because it's one of my favorite assets. Okay, yeah, not doing real much, really. Still stuck around that $1,791.79 level. So still not really moving from that. So yeah, it's still hovering around that. Like I say, again, it's under slight pressure because of a rise in US bond yields at the moment. So that's where it is trading at the moment. Okie dokie. So anyway, other things happening today, which would be worth noting down, is we have the US Michigan Consumer Sentiment, which is due at 2 p.m. UTC. What is Michigan Consumer Sentiment, you may ask? Well, it is released by the University of Michigan. Surprisingly, that's why it's called the Michigan Consumer Sentiment, and it's a survey of personal consumer confidence in the economy. So it's basically a survey of you and me, Joe Public, and how confident we are in the current condition of the economy. Okay. Now, the expectation is for it to come in at 52.5, which is slightly higher than the previous reading of 51.5. Now, the consensus is anything above 50 is good. The more is above 50 is very good. Anything below 50 means the consumer is scared. And don't forget, like all economies, the US economy is really based a lot upon us consumers spending our money. Okay. And if the consumer is not confident, they're not going to spend their money. So they're going to save their money instead and not spend it. So this is, this is something that can be worth looking at. I mean, all joking apart, we've had some pretty positive US data over the last couple of sessions. NFP last week, 528 versus 250. That inflation reading, which was lower, 8.5 year on year versus 8.7 expected. PPI came in slightly lower yesterday as well. Initial claims was slightly lower yesterday as well. So it'll be interesting to see how this reacts, whether or not it will give dollar strength. Because, or will this, there's two outcomes of this. Either we see dollar strength, where the market wakes up and go, yes, because of this and because of the NFP and because of the inflation, the Fed will be aggressive, or whether the market will say, nah, the Fed's going to be gentle. So it'll be interesting to see what this result is going to be. Okay. Don't forget this. I made an announcement the other day, last week, no, 2 days ago. We're about to launch a brand new tixee Live series. At the moment, we have two series. We have the tixee Live, which I do twice a day in reference to the market. And then we do the watch-alongs, of course. We do live broadcasts of announcements. But we're about to release a third series. And this one's called tixee Live presents #AskJames. And with this series, I need your help. I need your good people's help. Because this series is going to be focused on a topic of your choice. So you choose the topic, and I will dedicate a whole live video just for that topic. And this topic could be anything market related, obviously. If you want to ask me what my favorite films are, of course, I'd be happy to do that because I'm a film buff. But anyway, it's a topic of your choosing. Anything to do with the market, anything you want to learn, be it technical analysis, fundamental analysis, anything, you choose. So all you simply do on the comments on either Facebook or YouTube, or even live online when I'm live at the moment, just put #AskJames and the topic of your choice, and I will dedicate a video just for that. In fact, we're going to do one next week from a suggestion from a viewer who watches this channel a fair bit, SMF 790, and they've asked me to do a special video on explaining market jargon. Because I use market jargon a lot, and I try to explain, but sometimes I forget. So I'm going to dedicate a whole educational video on market jargon. But I need more topics, so I need to know what you guys would like to know. So don't forget that. The market as it currently stands. Okay, the FTSE currently trading slightly higher, 0.48%. DAX currently trading slightly higher, 0.47%. And Eurostock 50 currently trading at 0.82%. Don't forget, you can ask me questions anytime you wish, or just simply say hello if you like. This is a live broadcast after all, and live does, of course, mean live. So feel free to say hello or ask me anything, or share your opinion on the market. Let me know what you think is happening, or even let me know what you think of the UK at the moment. Are they? I mean, they are obviously in a bad way, and yeah, it's not looking pretty. And I think they're going to be one of the first to really slip into a bad recession, followed by the EU and followed eventually by the States. But anyway, that's my opinion. But what's your opinion on the matter? Or maybe do a #AskJames on a topic you want to learn about later in the future for a video you want me to do. Okay, if there is no questions, not a problem. Not a problem. Don't forget, if you think of a question later, you can put it in the comments section on either Facebook and YouTube, and I will see the comments, and I will see the question, and I will answer that question next time I'm live on air. Which is, of course, I'll be back on again later today at 2 p.m. UTC, or around 1:30 to 2 p.m. UTC, and we'll discuss the US session. And as it's Friday, I'll do my usual weekly wrap-up of all the events this week. So don't forget that as well. So please come and join me for that. On that note, if there's no questions, not a problem. Don't forget, if you're watching me on Facebook and you enjoyed, brilliant. Is this do you want me to do a hashtag Ask James on this? Yes? Brilliant suggestion. Yes, absolutely. Absolutely. I was going to write this down. Jay Davis, fantastic suggestion. Candlesticks. Brilliant. Absolutely brilliant. Yes, 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 yes. I'm very excited about that. I would definitely do a hashtag Ask James video on candlesticks, and I'll explain all about them, how to read them. Brilliant. Brilliant suggestion. Fantastic. Thank you. Thank you. Thank you very much. I love that. I absolutely love it. Brilliant. That is a definite yes. Definitely yes. Hashtag Ask James. Brilliant. Excellent. Excellent suggestion. Thank you. Thank you. Right. Brilliant suggestion. Any more suggestions while I'm here? Anybody else want to learn anything else for me to do a specialized video on? No, but that's a brilliant suggestion. I'm really excited about that. That's cracking. Absolutely excellent. Absolutely excellent. I will definitely do that one. Definitely. Anyway, wow, brilliant suggestion. After that great suggestion, like I was going to say, if there is no further questions or suggestions, like I said, if you're watching me on Facebook and you've liked this little episode, by all means, give us a follow. If you're watching me on YouTube and you've liked this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video, I find it useful, give me one of those. It's nice to know that you like what I do. And as I can see, I've got a couple of likes already, which is really nice to see. So thank you for that. And thank you, everybody, for coming along to watch. I really appreciate the time you take to come and watch these little videos as well. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.